Hi, I am Anna. I come from www.ntvforex.com. Powell lets steam out of equities and spurs dollar short covering analysis. http ntvforex.com news ID D99FDA 9/17/2020 11:09:13 a.m. Overview. Profit taking after the FOMC meeting saw U.S. equities and gold sell off. The high degree of uncertainty without fresh stimulus did not win investors' confidence. The Fed signaled rates would likely not be hiked for the next 3 years, and without additional measures, that appears to be the essence of the switch to an average inflation target. The MSCI Asia Pacific Index snapped a 5-day advance, with several markets Australia, Hong Kong, South Korea, and Malaysia off over 1%. The Dow Jones Stoxx 600 in Europe is ending a 4-day rally and has halved this week's gains with about an 0.6% loss through late morning turnover. Financials and materials have been sold off the hardest. U.S. shares are weaker, and the S&P 500 and Nasdaq are poised to gap lower at the opening. European bond yields are 1-2 BP higher, while the 10-year U.S. Treasury yield is little softer at 0.68%. The dollar is mostly higher, with the yen and sterling the only majors resisting the greenback's pull. Its initially stronger gains have been paired, and only the Scandies and the Canadian dollar are off by more than 0.2%. Emerging markets currencies are also under pressure, with Turkey, Mexico, and South African, which is expected to announce a 25 BP rate cut shortly, the weakest. Gold has been set back but recorded a marginal new low for the week, $1,937. October WTI rallied almost 5% yesterday, the most since June, bolstered by shrinking U.S. inventories, which are the lowest since April. It is consolidating today and straddling the $40 a barrel level. Asia Pacific, as widely expected, the BOJ did not alter its stance or its bond buying operations. It did upgrade its economic assessment for the first time since the pandemic struck. The market recognizes a recovery is underway after 3 consecutive quarterly contractions. Assistance to the corporate sector remains a critical concern. However, Governor Kuroda does not appear poised to initiate new measures. The dollar was near 105 Japanese yen when Kuroda's press conference began and eased to the session low near 104 Japanese yen and 70 sen during the talk. It remained pinned near there during the European morning. August CPI will be reported tomorrow, and the core rate, which excludes fresh food, is expected to fall to 0.4% from flat in July. It would be the lowest since 2016. Australia offered a pleasant surprise. Rather than lose 3.5k jobs as economists forecast in the Bloomberg poll median, it gained 111k jobs. The unemployment rate slipped from 7.5% to 6.8%. Economists had expected it to have ticked up to 7.7%. The participation rate ticked up 64.8% rather than slip. Full-time positions grew by 36.2k, roughly the same pace as in July. Given the central bank's somber assessment and the outbreak in Victoria, one cannot help but wonder if the proverbial other shoe is yet to drop. The dollar is lower against the yen for the 4th session. It broke below 105 Japanese yen yesterday for the first time since the end of July and found support, as we suggested, at 104 Japanese yen and 80 sen. It made a marginal new low today. Although a new low can be recorded in North America today, the intraday momentum indicators are stretched, suggest limited immediate downside. On the other hand, $2.30 BLN in expiring options are struck between 105 Japanese yen and 105 Japanese yen and 10 sen. It is interesting, but not particularly impactful to know there are $3.40 BLN in options in the 105 Japanese yen and 40 sen 105 Japanese yen and 55 sen area that will roll off today. The Australian dollar was initially sold to new lows for the week $0.7255 but has rebounded to straddle $0.7300 in the European morning. The $0.7320 $0.7340 band offers the nearby cap. The dollar rose by about 0.25% against the Chinese yuan, its first increase of the week. The PBOC set the dollar's reference rate at 6.7675 Chinese yuan, which was a little firmer than expected. Recall the dollar finished around 6.8345 Chinese yuan last week. The dollar has risen in only 1 week since the end of June. Our operating assumption is that the demand for yuan from foreign investors and as a result of its current account surplus is not overwhelming officials, and that the persistence of the yuan's gains can only come if Beijing thought it was in its interests. Europe. In order to win over conservative rebels, Prime Minister Johnson was forced to offer an amendment that gives Parliament a veto over implementing the most odious part of the Internal Market Bill. At the same time, he will offer another amendment designed to limit a potential challenge from the judiciary. Sterling rallied in response, and the unwinding of the euro-sterling cross weighed on the euro prior to the broader dollar bounce after the FOMC. Yet, the stronger the hand Johnson is domestically, the greater the conflict with Europe. This has been the case since 2016, like scissors, closing the gap on one side opens it on the other. The UK has yet to disclose how it will check and enforce animal product inspections and trade. There are other issues relating to transport and energy that the UK. There is a month before the EU summit at which an agreement is necessary to allow time for the ratification process. The outcome of the Bank of England's MPC meeting is expected shortly. Few expect fresh actions now, but the consensus is for additional stimulus as its next meeting in early November. The BO has not shut the door on negative rates, but that does not seem to be the most likely next step. Instead, increasing its gilt purchases and bringing the base rate from 10 BP to 0 would likely be delivered first. A dissent in favor of immediate easing would not surprise. If Lagarde and Powell have emphasized the high levels of uncertainty, BO Governor Bailey has it twofold with the pandemic and what more and more people recognize as a likely disorderly exit from the standstill agreement. The euro, as we have argued, is in a range, and it has not been trending higher for several weeks. It was sold a little below $1.1740 in Asia, its lowest level since August 12. It recovered to almost $1.1820 in Europe before meeting new sellers. Assuming the nearby expiring options 880 mln euros at $1.18 and 530 mln euros at $1.1775 have been neutralized, note that there is a little more than a 500 mln euro option at $1.17 and a 1.2 bln euro option at $1.1850 that will be cut today. Sterling poked above $1.30 briefly yesterday but held below the $1.3040 38.2% retracement target of its drop from the start of the month. It was sold down to almost $1.29 before snapping back to around $1.2975. Sterling is continuing to recover against the euro, and that appears to be adding pressure to the single currency. The euro approached 0.9080 pounds sterling, which represents the 50% retracement of the rally in the first half of the month. A break would target the 0.9030 pounds sterling as the next retracement objective. The Federal Reserve did not surprise the investors. It delivered a dovish message without taking any new initiatives. Only one FOMC member saw a hike as likely in 2022. 2 did in June. Projections were made for 2023 for the first time, and 13 of the 17 officials expect that it will still be appropriate to keep rates at the 0.25 BP. There were 2 dissents. The first was by Minneapolis Kashkari, who wanted core inflation to be made explicit. This confuses many observers and economists, but the Fed targets the headline PCE deflator but talks a great deal about core inflation. Core inflation is emphasized but ironically not targeted because, over time, it appears that the headline inflation converges to core inflation, not the other way around. Dallas Fed President Kaplan also dissented. He wanted the Fed to have greater policy flexibility, which seems to be a pushback from a less dovish stance. Chair Powell repeatedly claimed that forward guidance is sufficient and powerful. He cited that as a reason to believe that the current asset purchases $80 BLN in treasuries and $40 BLN in mortgage-backed securities were sufficient. Although it seemed like a classic buy the rumor sell the fact type of activity, some observers suggested that without new tools to achieve its new inflation regime, the idea that the Fed would tolerate inflation above 2% when it could not reach 2% itself loses its potential sting. The 10-year bond yield rose 1.5 bp to almost 0.70%. The 2-year note yield was unchanged 0.14%. The implied yield of the December 2023 Eurodollar futures contract rose by a single basis point to 39.5 bp. The U.S. economic diary is busy. Weekly initial jobless claims are still front and center as investors and businesses try to gauge the condition of the labor market. A small decline in both new and continuing claims is expected, but at 850K and 13 MLN respectively, one can see the pressure to do more. The housing market has bounced back in a big way, and Powell recognized this yesterday. Still, after a 22.6% rise in housing starts in July, a small pullback is expected. Permits, a leading indicator, are expected to rise a couple percent after a nearly 18% gain in July. Lastly, the Philadelphia Fed's September manufacturing survey will be released. Recall that it peaked in June at 27.5 and stood at 17.2 in August. The median forecast in the Bloomberg survey calls for additional slippage to 15 in September. The Empire State Survey, which was also disappointed in August, rose more than expected to 17.0 from 3.7 and amid forecasts for a 6.9 reading. Canada and Mexico have a light economic calendar today. Canada reports July retail sales tomorrow. A modest gain 1% is expected after June's 23.7% jump. Mexico's calendar is fairly light until the central bank meets a week from now, but is widely expected to sit pat with its overnight rate at 4.5%. The US dollar is near the best levels of the month against the Canadian dollar. It rose to almost 1.3250 Canadian dollars earlier today, which likely means that option for $335 MLN at 1.3225 Canadian dollars has been neutralized. The US dollar's 8-week slide against the loonie ended last week. It was virtually flat coming into today's session for the week. A move above 1.3250 Canadian dollars could spur greenback gains toward 1.3300 Canadian dollars, 1.3320 Canadian dollars. The US dollar fell to a new 6-month low yesterday against the Mexican peso near 20.9230 Mexican pesos. It has recovered the 21 Mexican pesos handle but needs to overcome resistance in the 21 Mexican pesos and 16 centavos area to signal a further recovery into the 21 Mexican pesos and 30 centavos, 21 Mexican pesos and 50 centavos area. The greenback settled last week near MNXN 21.76. Its 5th consecutive weekly decline. Lastly, as expected, Brazil's central bank kept the Selic rate at a record low of 2%. The dollar looks comfortable in a BRL 5.0 BRL 5.5 range, which it has been for 3 months, but for a brief probe higher in late August. Subscribe our channel to receive the news as soon as possible. Thank you for watching. If you want to read real-time news, text messages to MT5 Expert Advisors page at https://mt5.expert.advisors.